The index itself is up around 4.5% at the high point of trade, and a lot of the other stocks are hitting fresh highs. So let's get in a view coming in from Market Master. We do have Nischal Maheshwari, who's the CEO of Institutional Equities and Advisory at Centrum Broking, joining us now. Nischal, thank you so much for joining in, and season's greetings to you, your family, as well as your team members. Speaking about banking itself, you've liked the banks, you've called it, being at a sweet spot. But up until now, you preferred only large banks. I wonder whether if the banking index, which is at a sweet spot, would extend its sweetness to all the others as well, say PSU banks and lower rung mid-cap banks as well.
Thanks. Season's greeting to your colleagues and yourself as well as the listeners. Yes, I believe basically the whole banking industry is in a sweet spot. And obviously, given that all the larger banks, including the PSUs, the large PSU banks have also really performed very well after the sterling results from Axis, ICICI, HDFC. I think very good results across the board. Even the smaller banks, Federal Bank result has been outstanding. So I think now the rally is trickling down. We are seeing basically all the smaller mid-cap banks also doing well. So it's like basically when the tide is up, basically all boats rise. So this is what's happening, and that's what we are seeing basically in case of mid-cap PSU banks also. So it's an across-the-board rally basically, and I think the reasons are pretty well known.
But Nischal, what would you prefer? If case in point, just look at a Canara Bank. In 1 month, the stock is up 30%. The management, Mr. Prabhakar, joined us a couple of days back. He sounded very, very optimistic. And I think on a forward book value, the book value should be around 325, 330 rupees. So even after this 30% rally, still in fact it's trading at around 0.8 times, 0.9 times approximately. Any preference from here? Some of these stocks haven't moved in years and suddenly they're up and about. South Indian Bank, someone said it's a Diwali pick. It's up 20% in 2 days. I mean, would you have a preference out there, or would you still stick to the larger names?
No, I have been recommending some mid-cap banks basically, but it was largely the private sector ones. So my picks remain to be Federal Bank and CUBK. That's the City Union Bank. And we do not cover much of the PSU banks basically, except for the large two ones, which is SBI and Bank of Baroda. So yes, I think there would be a few other PSU small caps also, or mid caps also, but given that we do not cover it, we are not recommending. But definitely, I think the rally is trickling down. I think the profitability, the balance sheets, everything seems to be now in a good condition. And given that the interest rates are going up, at least in the initial phase, basically, you're going to see good rally in the banking sector.
Okay, a lot of these stocks are sitting at fresh 52-week highs. By the way, MCX is the one that's surging now. It, in any case, was one of the big movers of the day, but MCX is now up over 9% and huge volumes being traded on that one. So there's plenty of action beneath the surface this afternoon. But IGL is surging despite a weak showing in Q2. It was a miss on all parameters for the company. So Sonal is here to put all of this into perspective for us. Sonal, any reason the stock is up over 7%?
Well, a couple of them. We spoke to the management earlier today and there was positive commentary coming in from them. But first, the numbers where it was a big miss on EBITDA. EBITDA margins came in at 14% versus expectation of 17.7%. EBITDA was also down 15%. EBITDA per unit came in at 7.1 rupees per SCM versus a poll of 8.8 rupees. Volumes, however, for the company at 8.1 SCMD were at a multi-quarter high. We spoke to the management and asked them their outlook for the coming quarters as well, and they said that the pressure on margins that they are seeing is temporary. They expect gas prices to go lower from these levels, and the Kirit Parikh committee, which was set up in order to revise the pricing formula for domestic gas, the outcome or the report should be out in few weeks itself. They are also looking at acquisition of a smaller city gas distribution player. It is at the discussion stage, but something should be finalized by this year end itself, and that is something which will add to the volumes for the company. That is what they say about volumes. They expect volumes to be around 10 SCMD in next 2 years. So that's a big jump from current levels. So positive commentary and expectation of a gas price cut also is something which is propelling the stock higher today. In fact, we spoke to the management. Let's listen into what they had to say.
Even if we earn slightly less, even if our earning per SCM is slightly less, we would like to grow to 10 million cubic meter per day. Presently, this quarter, we are at 8.09 million cubic meter per day. And we hope to reach 10 million cubic meter per day in 2 years from now. And that is our prime target because we feel that the gas prices are temporarily at such high. The moment the geopolitical issues are resolved and the government has taken a very significant initiative in the form of Kirit Parikh committee, we hope they will look at the problems that CGD sector is facing and they will come up with certain solutions that people are discussing about presently.
Okay, that's on IGL, but Nischal Maheshwari is back with us. Nischal, I wanted your thoughts on many of these companies, right, where there could perhaps be a lot of selling post the 10th of November. I mean, we're seeing it with the likes of Nykaa, Delivery, as the pre-IPO lock-in will expire on the 10th of November. What do you do with some of these platform companies? Do you stay away entirely? If you're a holder here, what's the call?
So I think it has to do more with the company specifics. Basically, there may be stocks, but I think one thing is common across of them. Basically, after 1 year, a lot of private equity guys who have been there holding on to the stock might look to book profits, like we saw it happen in case of Zomato. So if you are not a holder, basically wait for that day, basically, and you might find something what happened in Zomato. It went down to as low as 40 rupees, and it was a good, interesting price for you to acquire. So that is one strategy. Basically, if you're not holding it, and if you're holding it, I think it's still time to get out of it and wait for that fall to happen, and then maybe reacquiring that if you like the stock.
All right, we take that point. Nischal, I'd like your views on two stocks in particular. The first one is Reliance reported numbers. Currently, as we speak, the stock is at the low point of trade. You were looking for some more details coming in their, consumer-facing businesses, even as there was weakness in the O2C business. So now that we have the numbers, what is your view on the stock? And the second one is ITC. Stellar results, stellar rally. You've been bullish on the stock since what, 165, 167. What do you do with the stock now that it's rallied so much? Do you think it's still worth holding?
Definitely. I think ITC has done very well as we had expected, and they are continue to deliver basically on the margins, especially on the FMCG side. We had expected that they will deliver something like 8.5% in FY23. They are on the EBIT level. They are already at 7.3. So I'm very sure basically that's the kind of number basically they will be able to deliver. So they are delivering as per expectations. And still, as the management has continued to guide that they might look for hiving of the hotel division. So there are enough triggers in the stock. And if you look at the stock also, if you look at the valuation, it's still at least around, I think, 25 to 30% cheaper than any of the large FMCG companies. So I think it's a good hold. Rather, actually, you should be buying something like around 330 levels. So we are very comfortable holding the stock at these prices. As far as Reliance is concerned, I think the results are very good, except for there was a bit of disappointment, especially on the oil side, both on the upstream as well as on the downstream. So I think, and especially on the petrochemical side. So I think that is where I think market is a bit disappointed. But going ahead, I continue to believe the consumer-facing business will continue to do well. So we are positive on Reliance, and we continue to recommend to accumulate this stock at these prices.
All right, take that point. You're positive on both ITC as well as Reliance. You are hoping for a demerger or any sort of strategic announcement coming by on ITC, but a strategic announcement did come by on Reliance itself. We'll talk about more in just a bit, but the other stock on our radar is Laurus Labs. A big decline is what we've seen in the last couple of trading sessions. In today's trading session as well, down almost 5%, and this is on the back of a flattish performance, but importantly, the guidance was something that the street did not like at all. We did speak with the management, but Ekta joins in with a fine print of the numbers and what she made of the management commentary to CNBC-TV18.
Thanks for that. Well, yes, definitely a disappointing quarter which came in for Loris. Remember, it reacted to its numbers quite sharply on Friday's trading session, but the street seems to still be quite unhappy in terms of the guidance cut. Now, in terms of the overall numbers, remember they reported a 30% revenue growth, margins of around 28.5%, which was largely supported by the synthesis division, which was up around 365% on a year-on-year basis. And the street is a bit skeptical about whether or not those numbers can sustain going forward, because a large part of it or some part of it was expected to be supported by a COVID-19 related order that they are executing. But one of the big factors was the formulation division, which was down 70% year on year, because the antiretroviral segment, which is basically the anti-HIV drugs, etc., resulted in pressuring the formulation sales. The company, however, said that they are quite confident in terms of the ARV segment recovering in the second half. The other factor is that the company did cut its guidance. They are not on course to achieve that $1 billion revenue guidance for FY23. They said that they will miss it by around 10%. Anticipated to report around 6,500 crores in terms of revenue, and that should still be a double-digit growth, but the street doesn't seem to be enthused with that. Now, the potential miss is coming from most likely the ARV segment and the underperformance from that particular segment. When we asked them about FY24 guidance, they were extremely tight-lipped, but they were confident in terms of margins being maintained at those 30% levels for the near term. Now, Citi has a sell rating. They've cut the target price to 415 rupees. Motilal is confident. They've maintained their buy call with a target price of 610 rupees on the stock.
Okay, all right, Ekta, thanks a lot for that. Nischal, the management, they were sounding optimistic about the recovery from here on. Only thing, when Ekta counter-questioned them and said, what about that target of $1 billion in the next year? That's FY24. They were still non-committal. So that'll be interesting, whether or not they can get to that mark at least a year later. But what's your view on the stock? Remember, this one went up one way and then it saw a correction from the top.
Sorry, Nigel, we do not cover that stock actually, so difficult for me to comment on that.
Any of the pharma names, Nischal, that you would like, maybe with or without exposure to the API space?
We like a few of the larger names again, basically Dr. Reddy's, Sun Pharma, Cipla, and the mid caps we like Aarti Drugs. So I think some of these names is what we like. The underlying theme remains to be the domestic pharma, basically, which is doing pretty well, and where we continue to believe basically the outlook is also very strong. So that is our theme basically that we want to play. And we are trying to avoid basically the turmoil which is happening, still the margin pressure and everything which is happening in the American market. So that's the way we want to actually play out. Unless you are something what Sun is like a specialty seller of drugs basically in the US market. That's what you want to focus on.
Okay, all right. Thanks so much, Nischal, for stopping by, discussing a whole host of stocks. We'll let you go at that. Have a good evening and have a good holiday tomorrow as well.
Thank you.
Well, before we slip into a short break, just pull up the PSU banking index. And a lot of these smaller banks, they are flying away. Union Bank, it's moved to the high point of the day. Big move out there. PNB Astis was gaining. It continues to trend higher. And you have Canara Bank as well that's moving out there. Well, that space clearly has got a lot of attention. The numbers have been looking good, and the stock prices as well are moving in the same direction as well. PNB up close to around 6.5%. Well, we'll slip into a short break. Where on the other side, we'll track the technicals of the market. Jay Bal of CashTheChaos.com will be joining in. We'll also put the spotlight on a whole